for a second, is the most highly performing asset in the cryptoverse over the last 12 months. They claim to be a combination of both Bitcoin and Ethereum, the proof of work capabilities of Bitcoin with the scalability and security of Ethereum. They are also looking to implement smart contracts here in the near future, but they have to manage a little bit on the back end. I think the founder was saying something along the lines of having to recode Rust. They were going to have to figure out how to rewrite all the contracts in Rust, which is their native coding language. So it's very interesting. Thank you for bearing with me. I'm very excited to be here to talk about this. I'm going to make sure that I'm live because I just did that spiel 30 seconds ago, but I wasn't actually live, and so bear with me. This is the first classroom that I've done here, so kind of exciting for me personally. I just clicked on the link, and cool. It is live. Let's go. Okay, so I have the chat pulled up. Not that you guys are going to be able to see it. I will be paying attention. If you have any questions, please feel free to ask anything at any point along this journey. I'm going to hold Discord open as well so that I can see everyone's comments. So just to make sure that I'm not missing anything. Yeah, so I'm in the PS chat on Discord as well, so if I don't see your comment or you can't comment under the YouTube video for some reason, go ahead and just throw a comment in there. Let's get going so that we don't bore anyone who's watching this as a recording. So this is my crypto checklist. What I have in front of me is the third iteration of my crypto checklist, and that's because I've gone through multiple different iterations in which I've found plot holes and different areas that need some improvement. So I've boiled it down to 4 questions that I pay attention to when I personally am doing research on a new cryptocurrency. If we are able to check off all 4 of these, and I'm able to answer them and I feel comfortable with my answers, then and only then do I move on and do a little bit deeper analysis, because there's 25,000 cryptocurrencies, and so if I can't even answer these 4 basic questions, what is the point? What am I doing? I'm just making excuses to try and find a reason to validate my already existing bias either for or against a cryptocurrency. So here we go. What is the main problem that this crypto plans to solve? So Kaspa, ticker symbol KAS, it's very simple to find what the main problem is, because all you have to do is go to that cryptocurrency's website, in this case kaspa.org, and you will see directly Kaspa's vision. So we want to build a system that surpasses the limits of Satoshi's V1 protocol, yet adheres to the same principles embedded in Bitcoin. So when Bitcoin initially was launched, the goal was to be a peer-to-peer transaction model. You wanted to be able to send money to people using Bitcoin, which is still capable. However, it was meant to be more of a digital currency. Now it's evolved into a digital gold, a digital commodity, an investment vehicle, or a store of value. I guess a currency is still a store of value, but Bitcoin was very clunky. Because of this, most people do not use it to just buy things with. They want to use it to invest and hold and speculate on the price appreciation. So that might still happen with currencies. In fact, that does happen in currencies. People still speculate. But the main premise here is that Bitcoin was too slow. Bitcoin was not scalable. So they adopted different protocols and they adapted Bitcoin's vision away from the V1 protocol, which Kaspa is trying to reinvigorate. It didn't become a peer-to-peer electronic cash system. Instead, it's solidifying in the ultimate store of value, or e-gold. Now, I'm going to make sure, I don't see any comments yet on the chat, so give me 1 second to make sure that it's still functioning correctly. I don't want to be chilling here and have it be super, super laggy. Oh, it's not listed. I forgot about that. Okay. All right, we're chilling then. We're chilling. I know I'm live. So please, I'm going to put a comment here. Get out of here. I don't want to see my face like that. Okay, I guess I have no choice right now, but There we go. I completely just doxed myself there, holding this open, huh? That was awkward. That was really, really unprofessional, actually. But regardless, so Kaspa is a layer 1. Now, that answers the main problem that it plans on solving. It wants to be a peer-to-peer cash system. How is it going to solve this problem? As we're fully aware, this is a problem that the world faces. You need a decentralized, permissionless way to transact value. That's why we're all within crypto. The main thing here that they're getting at is the trilemma, which I'm sure everyone has heard of. It's scalability, decentralization, and security. You have to pick 2. You don't get to have all 3. You are forced into picking 2 of these. Or so that's the conventional method of thinking. Every single cryptocurrency that is out there that's a layer 1 is claiming to have solved this. So our job as investors is to sift through and kind of see who does the best job at solving this. The way that Kaspa is trying to solve this is by taking the same algorithm that Bitcoin uses, but rather than putting it on a blockchain, which everyone knows what a blockchain is, it's just a list of transactions that are in one continuous chain, they are putting it onto hold on, I wrote it down because I knew I'd forget the name of it, a block DAG. And I could try and explain it to you, or I can just have this handsome gentleman here explain it to you, which is what I'm going to do. Well, that's how listening to it at 0.2 speed is unnecessary.
Space is directed acyclic graph, or DAG. So what is a DAG? Well, the description of a DAG is in the name itself, but I'm going to decompose the acronym starting with the G. If you've seen my video titled, What is a Graph Database? You recall that the data in a graph database is stored in the form of nodes and connections. Well, these nodes and connections are what we call a graph. For example, if you've ever created a mind map in a brainstorming session, then you know what the basic structure of a graph is. However, if we define some rules around that structure, then we can get it to accomplish some interesting tasks. And that takes us to the word acyclic. If you take the letter A out of acyclic, then you're left with the word cyclic, which is the base for cyclical and cycle. But if you add the A back in, then it turns cyclic into its opposite form, which is something that does not repeat itself. So an acyclic graph is one that has a rule about avoiding cycles. And this takes us to the directed part of a DAG, which basically means that the flow has a defined direction that it is going in. Now, if we put all of that together, we have a graph with the rule that the flow goes in a specific direction and that it contains no cycles. So a real-world example might be the last package you ordered online. The package destination should flow towards you during shipping, and any scenarios where that direction cycles back would be considered an error. Now, there might be many destinations where various packages will flow, but the endpoint is you. So what wouldn't be a DAG? Well, the delivery truck that delivered the package to your door.
That is the same algorithm that Hedera is using. So you hear everyone online say that HBAR is built not on a blockchain, but rather on a hash graph. This is the same thing. Hedera is built on top of a DAG. So if you're familiar with how Hedera works, you're going to be familiar with how Kaspa is working.
Yes, it does go in a single direction for delivering the package, but when its deliveries are done, it returns back to the distribution center. So basically, there can be no way of getting trapped in a cycle if we're going to call the process a DAG. Now, in the realm of data, a DAG is a very formalized workflow for transitioning data. That could be transitioning it from a location, enriching it, consolidating it, curating it, etc. Often there are graphical tools which drive DAGs for data processing. However,
that's good. That's good information. Okay, so that's how they plan on solving the trilemma. So it's interesting because they're taking the same concepts that Bitcoin used in its initial version in V1 of Bitcoin when it was trying to be that peer-to-peer cash system, and the limiting function, the limiting factor for Bitcoin being able to scale was the fact that it was using a blockchain. A blockchain being just one block is closed, and then it connects to one more block, and each block being a list of transactions, and then there's one pathway from that block onto the next block. And so in order for one block to be added, you need to make sure that the previous block has been closed on Bitcoin, on a normal blockchain. On a DAG, you can have multiple blocks coexisting and co-closing at the same time, or virtually at the same time. You can close one block, you can propose one block, and then propose a second block before that initial block has been solidified and has been closed. And both blocks can still be added to this graph, because it's not a chain, it's a graph, and so they have multiple connection points. Hopefully that makes sense for everyone. I think it's very fascinating, and it kind of like the next iteration for blockchain, because it's not a chain. What does that enable? That enables them to have very, very fast transactions. So they close a block in less than 1 second. And because they're able to work on multiple blocks at the same time, the block itself might take 10 seconds to close, like it says right here, transaction in 10 seconds. They are already working on another block, so they are able to close multiple blocks within the same second. You can actually see that here, blocks per second. Right now is, well, okay, right as I pointed out, it slows down dramatically, but they're able to, let's see if we can wait for this to pop into more than one block per second. Obviously, it's not going to while I'm on the live stream, and that's fine. Something I want everyone to pay attention to as well, though, here is that the real transactions per second here is only 1.2. So while on their website, they're going to make a claim, and I might have closed out of this claim, but they claim to be able to handle 100,000 transactions per second. They claim to be able to handle tens of thousands of transactions in a second. And that might be true, but currently speaking, in practice, they are doing less than one transaction per second. But so why would I even be interested in talking about this cryptocurrency with you guys? There's a couple reasons, and we'll get into that in a second. It has to do with the tokenomics and the initial distribution. All of these things right here, the fastest transaction times, you can put that on any website. That's up to us to be able to actually confer and make sure that that's accurate. I believe Solana has faster transactions. Instant transformation. I know that Algorand does instant settlement, just like Kaspa is doing, and it is even faster than 10 seconds. So again, they're boasting this, saying that they're one of the only blockchains that does it. Is that or is that not true? These are all things that we need to look into and be more skeptical on, because on their website, they're allowed to claim pretty much whatever they want. A lot of companies, a lot of cryptocurrencies, I'm sure, are even making false claims stating that they are partnered with people that they're not actually partnered with. So you just need to be aware of these things, because who's going to call them out? If I on my website write that I'm partnered with Amazon, Amazon's never going to see that. Amazon's never going to call me out on that. So I could just be faking stuff, and you need to be aware of that at the very least. Scalability, this is the problem of Bitcoin that they're trying to solve. They are keeping I think I might have already closed out of that too, but they're keeping the same SHA-256 algorithm that Bitcoin uses. There it is. SHA-256 hashing algorithm that Bitcoin uses, and just implementing it into a block DAG. So very interesting. An example, and then we'll move on to the tokenomics, because the tokenomics is why I even paid any attention to this. But IOTA is not a block DAG, it's a regular DAG of transactions. So as you propose transactions onto IOTA's blockchain, it's not a blockchain, onto IOTA's graph, they just take them as they come, and they attach each transaction as it comes individually. This is doing the same thing, but with blocks. That way they can maintain having miners. Why did I even pay any attention to this? I paid attention to this because they have a maximum supply of 28.7 billion coins. Currently speaking, they are almost at 19 billion coins. But there's a lot of cryptocurrencies that have maximum supplies. That isn't super unique. It is something that I like when I'm looking at cryptocurrencies to potentially invest into. What I like here is that they did a fair token launch. So if you were to Google any cryptocurrency initial distribution, you will find that most cryptocurrencies have given VCs and angel investors and the team and the initial founders certain allocations of the initial token supply. often at an extreme discount of what the first launch of that token price is. Polygon is a perfect example of that. I believe they gave insiders and angel investors access to Polygon at less than 1/10 of a penny. Now not Algorand, Polygon Matic. At less than 1/10 of a penny. Now you see the price of it and you understand why they have such an incentive to dump on new token holders, because they're up an egregious amount. Kaspa did not do that. They did a fair token launch, and as a result, you can actually see that the largest wallet outside of the exchange wallets, right, MEXC and KuCoin, Gate.io, and CoinX are the largest holders, but that's expected. The largest holder that is not an exchange only has 1.3% of the supply. I'm a huge fan of that distribution. You can see here that most of the wallets are down here in the shrimp, crab, and octopus categories, meaning that they have a good distribution of the coins, which is something that we should be paying attention to because it limits that risk factor of dumping. The other thing that I really like about it is that they showcase the emission schedule for everyone to see. They didn't try and hide this, and so it's very evident when the largest amount of inflation or dilution is going to be happening. So in the first year, they did a lot of inflation. You can see that directly on the chart here. In the first 12 months, the token supply went from 0 to 15 billion. And in the second 12 months, that slowed down. I just like that they outlined it so that we can go check it as investors. Currently speaking, we're in the 6th month of 2023. This is the exact actual day that they have another decrease in amount mined. So it's really cool. You will notice that this is a little bit behind schedule. So that means that there's been more. The total mined right now, according to this emission schedule, is 18.776 billion tokens. However, if you were to go to the scanner, you will notice that the current supply is 18.977 billion. So there's a discrepancy. We currently have more coins in circulation. That's because the network is more active than they initially anticipated, right? And so you get a little bit extra coins coming out into circulation. So the main problem that it solves, back to the checklist, the main problem it solves, we went over that. We went over the tokenomics and the initial distribution. This is huge. I'm a big fan of these two things, which is again why we looked into it. The main problem it solves makes a lot of sense. Why must someone buy it, and why does it do better than its competitors really boils down to these initial claims. Where'd it go? Really boils down to these initial claims. So you would have to take the time to analyze Kaspa versus all of the other competitors. So Litecoin, Bitcoin Cash, Algorand with the instant confirmation, Hedera with the use case between graphs instead of blockchains. You could even take the time to look into IOTA because that is another version, and kind of just compare and contrast the benefits versus potential drawdowns. I actually wrote some drawdowns, but I need a sip. Do any of you guys have any questions right now? Let me see. It's very possible that I've been chatting with myself, but we're gonna go over the founder and kind of the team a little bit here, and then some potential problems that I think is worth bringing up for Kaspa, things that we need to be asking ourselves when we're taking a deep dive into this. I'm clicking on the link though to see. Okay, it's not lagging that crazy. My internet is not the greatest though. Thank you, Spectrum. Got in a bit late, having to watch it from the beginning. All good, AVAC. All good. Yeah, it's cool that it's going to be on YouTube, so we're going to actually be able to take a second and go through it later. It'll have a log of all of the research that we've done. I'll keep trucking along then, since we're all watching at slightly different points here. Hold on, I'm about to burp. Something that's very intriguing to pay a lot of attention to is the decentralization aspect of it. They're claiming to be a competitor to Bitcoin in that sense of being fairly launched like Bitcoin did. Whoever the first miners of Bitcoin were, which was Satoshi, were able to accumulate the most amount of Bitcoin. The same thing here with Kaspa. So the people who were mining it in the very beginning were the ones who have the most of it, unless they all dumped it. That is a fair token launch. Their website, we'll go directly to their website, is built and maintained by the Kaspa community members. So while there are developers, they are decentralized enough that this main website for the cryptocurrency is not even held by any one individual. It is built by people, not institutions. So that's cool. I like that. That's another check mark for me personally. With that being said, there are still people developing on it and working on it, as there should be if you want to continue moving forward. So the founder, I'm gonna butcher this so bad, Jonathan Sampolinsky. He works, or actually, I believe he was the co-founder of DAG Labs. Yeah, okay, I guess I could have just read that. With the purpose of implementing the Ghost DAG protocol. So again, we got to look at the root of the word. Ghost DAG is just what we went over, this DAG difference from blockchain. So he's the developer, and we can actually go the lead here, and we can actually go look and see. He is known as #DAG on social media. So he was answering questions recently in regards to implementing smart contracts on top of Kaspa, because Kaspa is a layer 1 right now that is solely focused on peer-to-peer, so it doesn't have the capabilities of using smart contracts. They're looking to implement it, and there's two possible ways of doing that here. The first is to make Kaspa native smart contracts so that the sequencing and the settlement is done on KAS. This, according to the founder, would require a fork of the code base in Rust. Rust is the programming language that they're using here. One of the leading RU projects. The pros, it would be a native Kaspa implementation. The con is that it would be a massive fork in the blockchain. So then you kind of get a little bit of civil unrest here in the community of Kaspa, because some people, I'm sure, would not want to have this fork, and thus they would break the blockchain in two. They would break the network in two, just like what's happened with Bitcoin so many times. When Litecoin was created, it was just a fork of Bitcoin. When Bitcoin Cash was created, it was just a fork of Bitcoin. When Dogecoin was created, it was just a fork of a fork of a fork of Bitcoin. So you end up just segmenting community when that happens. Gonna watch at 1.5 speed from the beginning. I respect that, Lewis. I respect that. All of the videos that I watch on YouTube are at least at 1.5, if not 2x speed. Just 1.5 or normal 1 speed is just far too slow. So the second option here is that Kaspa becomes a sequencing layer and settlement is done on Ethereum. So they would be bootstrapping Ethereum smart contracts, effectively just making it so that Kaspa is a sidechain for Ethereum, which I don't think is something they would be interested in, because then it's just another EVM kind of. Not exactly, but like, I don't think they'd be a huge fan of that, in my opinion. At least I wouldn't be. Maybe my bias is coming through here, but these are the two potential ways to implement smart contracts onto Kaspa, according to the founder of Kaspa. I'm gonna butcher his name again, so I'm not even gonna say it. Now, potential red flags to pay attention to. One is that the distribution of tokens happened so rapidly from the initial launch of Kaspa that I am nervous they won't be able to maintain adequate awards to incentivize the miners to continue to secure the network, because then they're going to have to rely on fees. And while the fee structure is very difficult for me personally to find from Kaspa, I did note that people are reporting only paying like a very, very small fraction of a Kaspa for a fee. I don't think I wrote it down here, but it was like 0.0001 Kaspa, which is weird as hell because Kaspa coin market cap. Because Kaspa is only worth 1.5 cents right now. So if you're paying a super, super small fee for a transaction and you're only doing 1 transaction per second, what's the incentive model here for any miners? Oh, we're up to 2.6, right? Will there be any issues with that on KAS? Isn't there a security reason why Bitcoin lags confirmation? Yes, so that goes back to this video that we watched. So Bitcoin being a blockchain prevents it from scaling. Kaspa being a DAG, kind of a graph rather than a chain where one needs to be completed before the next one. Being a graph, you can do multiple at the same time. So in this example here, the origin block of A, you would have C and B being worked on at the same time. In Bitcoin, you need one to be closed before you can start working on the next one. So that's kind of where it gets slowed down. Maybe they've decided Rust because of Elon's tweet, AI is ditching Python. It's definitely very possible. Kaspa's been working. The idea has been up in the ether since, I believe, 2012. And it just launched recently, but they've been working on it for a very, very long time. So with this, it just makes me a little bit nervous that people would no longer be willing to mine the network. The fee wouldn't be there for them, right? Because it's going to use energy. It's the same mining algorithm as Bitcoin, so it's going to be using energy. Or it's the same hash algorithm, so it's going to use a ton of energy if it scales to similar sizes. Not the exact amount, because it is not a blockchain, it is a hash graph, and that gets into stuff that's a little bit over our heads here. Not going to go into that specifically, but the incentive model is something that I'm questioning for its longevity. The other thing is that there are only 210 active public nodes running Kaspa's network as of right now, which is not a lot. It's a decent amount. It's more than a lot of other blockchains that claim to be decentralized, but Ethereum, I believe, has got 10,000. Bitcoin, I think, has got like an order of magnitude higher than that. Didn't quite catch the video. Sound was very low. Okay. Well, that's my bad then. I don't really want to listen to it again, but I will put the link in the Discord in the PS chat. We'll do it right now. Actually, I can't do it right now because I closed Discord so that I could be live streaming. Yeah. Those are the two main issues that I see with Kaspa. I'm a huge tokenomics guy, and the tokenomics of this are something that I think each of you should take a little bit of time and go through more in detail than what we're doing on this live stream, because they are very, very good. I like the fair launch of Kaspa. I like the inflation rate of Kaspa. I don't like, again, the lack of incentivization for miners down the road, but not everything can be perfect. I think that's pretty much the whole argument here. I went through, just pulled up the Twitter accounts for the founder here. You can follow him if you want to see a little bit more information about it, but I was struggling to find anything super, super valuable that he was putting out here. Most of the information that he puts out, I believe, is on whatever website this is listed on. I can't remember right now. What are your thoughts for Kaspa on the next bull run? I don't know that I've done a complete price analysis on Kaspa. Something to pay attention to, and something that I've personally been looking for in new cryptocurrencies that I would like to potentially add to my portfolio is something like this. if you look at the history of cryptocurrencies that have been in the top 100 and how they perform from their first bull market into the second bull market, a vast majority of cryptocurrencies do not make it back to all-time highs after their first bull market. So there's a clear as day half-life when it comes to crypto that is about 4 years. So I'm looking for some projects that look like they could have decent potential that have launched since the end of the previous bull market. Kaspa looks like it's one of those cryptocurrencies. It's up 7,800% despite having fallen by like 60% here, 55%. Its current market cap is sub $300 million. It's 1.5 cents, and most of the dilution has already taken place. Is it possible for Kaspa to hit a multi-billion-dollar market cap? It would need a lot of social attention. It would need a lot of hype behind it because there is no smart contracts. There is not a clear use case for the token aside from peer-to-peer, which actually, thank you for bringing that up. This is the kind of stuff you would be paying attention to give you some sort of social proof that it is being adopted. You have a mechanic house here accepting Kaspa as payment in Plano, United States. So that is the way that you would see more and more adoption. That's when the price would appreciate because it's just a peer-to-peer system. It's at a $300 million market cap. Could it get to a $3 billion market cap? It absolutely could. I'm not going to bet the whole family farm on it, but I probably will put a little bit of an allocation into Kaspa because it checks off a lot of the boxes for me personally. How much money, I'm not totally sure, but I think that it would not be out of the realm of possibility for this to be a 20-cent coin. And really, if we want to go out on an aggressive limb here, okay, and compare this to Cardano for a second, which I think is a little bit ambitious, but just for the funsies of it, right? Just because we're here chilling. Cardano, during the last bear market, had a market cap down here of 700 million. It had a coin price down here of about the same, actually. About 1.5, like 2 cents, 1 cent. So respectfully, this like larger. What I'm trying to say is here, Cardano did not have smart contracts during the last bear market. Cardano launched smart contracts during the last bull market. Cardano went from a market cap of 700 million to a market cap of 90 billion. It had an extremely outlandishly strong supportive community. So I don't think Kaspa would do something like that. If it did anything remotely close to that, say the events followed suit, and a year from now, Kaspa is talking about launching smart contracts on a cryptocurrency that is as decentralized as Bitcoin and as secure as Bitcoin, and it was able to make it up to a $90 billion market cap, you're looking at a 300x? I don't think it's realistic, okay? I don't want this in anyone's heads. I don't think it's realistic, but if it were to go to the same market cap that Cardano went to, it would go from 300 million to 3 billion to 30 billion times 3, which is a 300x. A little bit way too aggressive. I'm just telling you numbers. I'm just throwing numbers out there, right? I'm guessing you'll be buying. If so, what is your price target? I will likely add this to my portfolio, my $500 small account challenge portfolio. It's honestly at a price that I'm okay with adding it at right now. This under 1.5 cents, I think, is not that unrealistic for me to be adding. So I'll probably put something like $20 into it. Again, it's a $500 portfolio size, so do the math and extrapolate out with that. My sell target, I don't know that I would have a price for it. I think when we are no longer arguing, about if we're going to make lower lows. So once Bitcoin has broken through its all-time highs and it's clear that we're in the next bull market, that's when I would probably start selling this early into the next bull market. This would be one of the first things that I likely dump. So whatever price it gets to, I have no idea. I think it's fairly, yeah, whatever price it gets to, I don't know. That's pretty much it. Kaspa attempting to unite Bitcoin's decentralization proof of work model with Ethereum's ability to host smart contracts while upgrading from a blockchain to a block DAG, which is what Hedera uses. I don't know why I was so robotic when I was saying that, but this is my crypto checklist 3.0. I appreciate all you guys for being here. I'm probably going to go over into the Discord lounge for a couple minutes and just chat with you guys. Yeah. I'm going to end the YouTube so that we're not just killing time here.